project focused on financing energy efficiency, retrofit energy efficiency. I think it's very important. It brings together a unique set of partners from the mortgage industry. This is a project led by Nationwide, working with construction industry, energy industry, housing industry, and academia. It's a project funded by Innovate UK, and as you'll all know, no public sector project like this can go ahead without a very painful acronym, and this one is called LENDERS, which stands for Leveraging Economics for New Drivers to Energy Reduction and Sustainability. Now, I work primarily in policy, so how do I move this on? That thing? I wanted to just start with the policy context. How are energy efficiency retrofit improvements going to be paid for in future? Green Deal, which was the sort of great new hope for financing, has been axed in, at least in its current form. Feed-in tariff completely slashed. Renewable heat incentives very likely to follow. Energy company obligation, which is paid for all the loft insulation, cavity wall insulation. From everything we're hearing from government, very likely to focus only on fuel-poor households going forward. And I think bigger than all those sorts of policy questions is just the issue that we've done a lot of the easy, quick, cheap, big payback measures now. We're on to more expensive measures that need higher upfront financing and don't pay back so quickly, like solid wall insulation. So how do we make it possible for householders to get the finance to pay for those measures? And of course, from a housing perspective, you know, homes are getting more and more expensive. That's a trend that never seems to stop. And that reduces homeowners' ability to invest, particularly people at the bottom end of the market who are buying the homes that most need improvements. So, as you all know, it's a legal requirement to provide an energy performance certificate whenever a property is sold, also whenever it's rented out, but we're particularly thinking about the sale market here. The energy performance certificate measures the property's energy efficiency, though it doesn't provide a direct assessment of the fuel cost of the property for that type of household that's living in it. Now, work DEC did in June 2013 looked at the effects of energy performance certificate rating on house prices, and found that, controlling for other factors, there is a link between the energy performance certificate rating of properties and their price. Now, building on this, the whole idea behind this Lenders project is to investigate further this link between energy performance certificate rating and house price, and to better allow both home buyers and mortgage companies to take that additional energy performance that you get with the higher energy performance certificate rated properties into account at the time of purchase, allowing larger borrowing and therefore allowing additional investment to improve the property at the time of purchase. So, current mortgage products assume borrowers have certain overheads. You may well be aware that, particularly since the financial crisis, banks have been obliged to look much more strongly at anybody's who wants to borrow money from them at their overheads in order to calculate and make sure that the borrower really can afford to make repayments each month. And clearly, because it's a big part of everyone's outgoing, a significant element of this calculation of mortgage affordability is the household costs of energy bills. And coming back to the whole EPC point, energy bills vary by consumption, and less energy efficient homes tend to use more energy. So what are we trying to achieve with this project? Now, what we're really looking to do is to help the finance industry to replace the current fuel cost estimates within their mortgage affordability calculations. As I understand it, at the moment, a lot of mortgage affordability calculations are done on the basis of what you're paying in your current house rather than on what you're paying in the property that you're hoping to go to, or in your property after it's had energy efficiency upgrades. And clearly that's missing a trick. What we're trying to do with this project is to enable mortgage companies and householders themselves to identify energy costs from energy performance certificate rating and other relevant householder characteristics, how many people are living in their home, what their working patterns are, through correlating those characteristics. And that's a fundamentally different approach to the one that's been taken to date. Normally, when you advise people on how much their energy bills might be in future, you use a simplified version of SAP. We at the Energy Saving Trust have a tool that does this, rather than extrapolating through the correlations between those key factors. So that's a key new technical development. We want fundamentally mortgage lenders to be able to vary the amount of capital being offered to take account of higher energy efficiency, to offer though more money to people with lower potential fuel bills. And to inform customers better, we want to develop a web-based tool and app aimed directly at consumers. And if this works, and it's an innovation project, it's all about trying to work out whether it can work or not, it's potentially massive. Just look at these numbers. 11.1 million mortgages totaling £1.3 trillion and growing. And if just 16% of the market adopted this amended lending method, more than £2 billion a month of mortgage lending could be varied according to energy performance certificates. So just think about, the energy company obligation is £1.3 billion a year. This is the type of money that even dwarfs that. So how is this project going to work? Well, we've got 18 months research. The project is led by Nationwide, as I've said. Technical lead is BRE. Energy Saving Trust are involved, obviously based on our consumer insight and particularly in terms of our address level data on individual properties, their energy performance certificate ratings, energy efficiency characteristics and household characteristics. We're going to look at how those existing affordability calculations take place, and we're going to assess how energy efficiency calculations could be included. And I'm sure it's a question some of you have already thought of. A lot of this depends on the accuracy of energy performance certificates, which is something which has been an issue that's been discussed and raised since the certificates were first introduced. So we will be looking at that accuracy of EPCs as undertaken in real life in the marketplace and seeing how, and if necessary, that could be improved. So I don't think I'm going to take up my full 20-minute slot because this is a new project. We're just getting it going. We're trying to tell you about what we're aiming to do. In summary, we're aiming to drive an increase in energy-efficient homes across all property types in the UK, unlocking a new source of financing. We're taking a multi-partner approach. I think the fact we've got the mortgage industry engaged in this in the lead is absolutely brilliant. And we're looking to influence the house buyer, influencing the market, and do it all by early 2017. Thank you.
Very much.